Have oil rising for a second day, though still notably below $100 a barrel on both WTI and Brent. But this after Saudi Arabia said that its production capacity has been reduced due to attacks on its infrastructure. Though, as you can see, crude futures are still lower for the week. Well, let's bring in Bloomberg's Middle East energy reporter Anthony Paola for more now. Anthony, good morning. I wonder how much damage have the attacks on Saudi energy facilities had, and how many barrels do we think have been lost?
Good morning, Lizzie. Yeah, that was an interesting statement late last evening, Dubai time, Riyadh time, from the Saudi press agency citing the energy ministry, talking about a kind of a long list of facilities that had been damaged. That includes, consequentially, the East-West pipeline, which is their main link that's now bringing oil from the Red Sea coast, from the Persian Gulf oil fields to the Red Sea coast, where it's exported from the port of Yanbu. And that's highly important because the Persian Gulf is closed, Strait of Hormuz has been shut off, and that's blocking all the exports coming out of the Persian Gulf. Saudi Aramco, the state oil producer, usually exports from a major facility at Ras Noura, which is right on the Persian Gulf. It's a huge facility with loading berths, offshore jetties. It's got a refinery. It's got liquid petroleum gas facilities. So massive site. They're now shipping about 7 million barrels across the country. About 5 million is going to export. So any impact on that pipeline is going to have some immediate effect. They were saying about 700,000 barrels a day of flow capacity was affected by an attack that took place this week, hitting one of the pumping stations that allows the crude oil to flow through that pipeline. So that's about a tenth of the pipeline capacity. But anything that shows an immediate impact on the exports is going to be important for the market. In terms of the production capacity, as you mentioned, that's more of a longer-term issue that traders in the market will be looking at, because already Saudi Arabia has had to shut in some production, stop some oil fields from producing, simply because their export capacity has been reduced, and they can't export the oil, so it builds up in storage tanks, and they've got to stop some of the fields. So some of that production has already been decreased, so that perhaps won't have such an immediate impact, but the longer-term impact is that traders, consumers, government officials are watching how long is it going to take these oil fields and other facilities to get back into working order once this war ends, and how quickly that's going to be able to bring oil prices back down and kind of get global economies back on a more solid footing. So that's really what the market's watching. Two different dynamics in those two different bits of damage that we heard about yesterday, Lizzie.
Well, of course, in the here and now, the Strait of Hormuz remains the main point of contention in peace talks and a focus for markets. What came out of that NATO meeting on how to secure the strait? Because it looks like more tankers are heading towards the strait, even as President Trump ramps up criticism and traffic remains limited.
Yeah, exactly. More tankers are heading there, but we're not yet seeing that more tankers going through. So there's a lot of uncertainty still about what is the situation at the Strait of Hormuz. The Iranians are saying they want to have some control. They're saying it's open, but we want to control it. And that means getting approval from them, potentially paying. So even shippers and shipping agents and traders that we're talking to aren't clear on the issues, and so they are being advised, maybe it's not safe to go through yet. The situation is not clear, so they're not navigating through. So we have seen vessels positioning themselves closer, looking like they may go through, and we're really watching to see if that does happen. Of course, let's remember that Iran has been sending its own vessels through the strait throughout the conflict, and so Iran is one of the countries that has been able to maintain their production and exports more or less where they were ahead of the war. Of course, they're well below their full potential because of sanctions and because of lots of pressure and lack of investment over the years. But even from that low base, they've been able to maintain that income over the course of the war. It's what is coming out of the other countries that's not going through, and that's what we're really watching for here, Lizzie.